Let's get started and invite our two experts. We have, and of course it's Ladies Special being Friday. So we have Mayuresh Joshi and Prakash Gaba who are joining in to answer all the queries that are going to come in from our women viewers. Gentlemen, good afternoon. I hope you're all set. And before we get started, some news flow also on KEC. It's 1,000 crore rupee order. So that stock should do well also. All right,
Our next query, Mrs. Kanak Narayan. She writes to us from Arunachal Pradesh. She holds 200 shares of Tata Chemicals at 648 rupees for the last 10 months. A long-term investor wants to know whether to hold or sell. Mayuresh, for Tata Chemicals, she's making a fair bit of profit, actually 23,000 rupees odd out there. What would you suggest one do for the long term, especially given, that trigger of simplification of the Tata Group companies, especially the consumer brands?
Afternoon, Mangal. Absolutely, you're right. I think the simplification of the organization structure is going to unlock value in terms of what the core businesses can deliver over the next few years. Now, coming to the core businesses itself, you probably have seen the soda ash volumes being a little tepid in the quarter gone by, but they were because of plant shutdowns in the US, some issues faced in the African operations, and a large element in terms of the energy costs actually moving higher. So what you saw in terms of crude, coal costs moving up, I think that did affect the overall margins of the business. But the company is expected to take hikes. He had taken hikes of around 400 rupees a ton in Q4, and if this persists, they might do that. On the consumer-facing businesses, Mangalam, you're absolutely right. I think when you're talking about the salt businesses for Tata Chemicals, I think that is probably expected to grow in a significant manner, and the products that they're expected to introduce, their own expectations are a 500 crore top line from the 200 crore that reported last fiscal. The specialty chemical, which obviously houses the sodium bicarbonate business, and obviously has a huge potential in terms of the new nutraceuticals products that it is doing, and the highly disposable silica, I think that can have a huge amount of contribution in terms of their overall SOTP contribution. And though I think the urea business sale and the phosphatic acid sale probably will come into the price going forward, I think the overall debt level should also start receding. So I think the new businesses should generate reasonable ROCs as well. So our all prospects on Tata Chemicals probably looks very, very sanguine in terms of the new businesses contributing significantly with ROCs and margins expected to remain stable. So I think a clear hold from my side that the investor is a long-term investor.
all right, makes sense. For the moment, remain invested. Our next caller wants to talk about ICICI Bank. Nikita Patil has written to us from Mumbai. She has 9,000 shares, which she has bought at 270 rupees. So she's well in the money at the moment. She's been holding on for 6 months. A long-term investor wants to know what to do. So I suppose, Prakash.
All right, Mayuresh, fathom of view on ICICI Bank?
Oh yes, and again I think the entry point was very good for the investor. And as far as the business dynamics are concerned, yes, you did see some amount of apprehensions because the provisions still remain elevated, and they would over the next 2 to 3 quarters as well, both aging related as well as the off-balance sheet items that you're probably looking at, and the exposure to the BB rated and below, which is still around 9%. So the outside risks of elevated provisioning might still continue on the balance sheet. But on the brighter side, I think what has probably transpired in terms of the management changes that we've seen, I think that probably has got captured in the price at lower levels. What you're also seeing in terms of retail advances, I think the retail advances are growing at a very fast clip. They're almost 57-58% of the overall advances of the bank. And when you're probably looking at qualitative advances meted out even on the corporate side, I think that itself lends confidence in terms of the return ratios actually improving for the better. So I think the PCR, which stands at 66-67% is still expected to go higher. The NCLT provisioning already stands at around 67-68%, so they are well provided for on those two fronts. But a large element in terms of their ROA is actually improving to 1.1% over the next 2 years. ROE is to 11%. And even on a price to adjusted book, I think the bank looks reasonably valued for the growth prospects that they can offer. So I think a clear hold from our side as well.
All right, a clear hold from Mayuresh's side as well. With that, we move on to our next query.
Hi, welcome back. Well, it looks like there's some bit of pace that's returning to the market, so a slight bit of uptick there. The mid-cap index now in the green. But let's address some more stock queries. Jigna Patel is on the line with us from Surat with a question on Dilip Buildcon. Hi, Jigna, how can we help you?
Yeah, I just want to know that I bought a share of Dilip Buildcon, 100 shares, So, what's the possibility of rise or decrease in this share? So I want to know the future of this.
And are you otherwise used to having multiple shares in your portfolio? I mean, is this your first few attempts?
I have just quite less experience in this. But
now I'm just trying to understand what place does Dilip Bilkon have in your portfolio? I mean, do you already have a positioned portfolio with large caps, etc.?
Yeah.
Okay.
I just want to know about Dilip Bilkon. Yes.
Okay. All right. Mayuresh, here's somebody who already seems to have a good portfolio going on. Amongst them is an investment in Dilip Bilkon, where she's losing a bit of money. Brought it actually close to its house, close to about 1,000 odd rupees. You see it going back to those 1,000+ levels?
So there is a possibility, because I think there are two things. One, I think the auditor-related issues is something which pulled the stock back quite significantly. To top that up, I think the issues cropping up related to the divestments of the EPC road assets to Shrem and whether the receivables would come through in this fiscal year as well. I think the management has tried to address both these issues time and again, and what you're probably seeing in terms of the financial performance, leaving these two issues aside, I think the financial performance for the quarter gone by was very, very satisfactory. So when you're looking at EBITDA margins at 17.8%, when you're looking at the overall order book at 24,000 crores, which gives very good revenue visibility. They've just won an order of almost 1,700 odd crores from the Maharashtra State Transport Department. So I think you're probably looking at execution capability still being there on the top. They're eligible for bonuses on that front. And on their HAM project as well, where the IRRs are far better compared to the EPC or port projects, you're probably looking at financial closure happening on 3 of the units as per their con call. And the remainder should happen over the next few months. So the Shrem receivables should also come through as per the management commentary. And if all this probably encapsulates, I think you're probably looking at a very strong revenue growth. So again, gross debt at 3,200 odd crore is expected to come down, which means that debt equity should come down significantly over the next couple of years. The cash flows with good execution and expectations of better IRRs from the HAM projects should itself create balance sheet support. So I think the fundamentals probably in place for the stock. A clear hold from my side, but just keep patience over the next few quarters for that earnings recovery to play out.
All right, clear hold from his side. And meanwhile, welcome back. The mid-cap index, while it's in the green, individual stocks, they're buzzing. And how? Coffee Day Enterprises, that one should come up for you, up about 8% as we speak. And funnily, is the same group company, Mindtree too, is moving higher as we speak. Mindtree is up 5%. Remember, Coffee Day holds stake in Mindtree, which is worth equivalent to the debt on their books, close to around 3,000 odd crores. And usually Mindtree's up move is followed by Coffee Day's up move, but today it's Coffee Day which is moving and Mindtree follows. Remember, mid-cap IT is also doing well because of the weaker rupee. All the IT stocks are fairly doing well. On the other hand, we have exporters which are doing well. Textile exporters, the likes of Welspun India, we have Indocount, Himmat Singh Said, all of them moving higher as we speak as well. So export-facing companies or export-oriented companies doing well on account of a weaker rupee. So we have pharmaceutical pack, the IT pack, as well as textiles. So that's those are the sectors that we'll watch out for. In the meanwhile, let's address some queries. We have Ms. Sneha Gupta writing to us from Jaipur, holds about 1,000 shares of ONGC at 188 rupees for the last 6 months. Long-term investor wants to know whether to hold or sell. Mayuresh, ONGC, what's your view? Our viewer has bought it at 188 rupees.
So again, I think it's a typical story in terms of how the oil prices might pan out henceforth. With higher oil realizations, obviously in the quarter gone by, they realized at $74.2 per barrel, and that probably abetted a very strong P&L growth. But a large element in terms of crude prices probably staying between 70-80, and the rupee equation against the dollar probably at these levels. I think that does create some amount of concerns or headwinds when it probably comes to the subsidy sharing. They have not shared subsidy so far, but if there is any burden on the exchequer, they might need to do so. So I think that headwind and overhang is something which gets played out on the stock at this point of time. But even if you look at the expectations in terms of oil production, Mangalam, so I think the expectation from a standalone basis for FY20 is somewhere around 24, 25 MMT, and the 3 MMT coming in from their subsidiaries or their JVs. Similarly, for their gas production, I think the expectation is close to around 25.5 BCM, and 1 BCM coming from their subsidiaries. So the gas prices probably can get revised for the quarterly update that we're probably seeing. That can abet that. The rising crude prices obviously have a straight effect in terms of net realizations. The dividend yield probably is again around that 1.8, 1.9% mark. So I think there are some factors which add solace to the stock, but there are few overhangs as well. But in a nutshell, I think if the investor has a long-term view and patience, she can probably hold on to this.
All right, Mayuresh Prakash, thanks very much for joining in and for advising our viewers this afternoon. For the moment, let's also focus